Hey, what's up, gutter cleaners? This is Dan Plata, CEO of Blue Skies Services, and today on this video, I'm going to be walking you through the gutter cleaning specific target budget that you can use for 2021. It's super similar to window cleaning, so if you've checked out the window cleaning budget already, it's going to look a lot like that. Basically, the only difference is labor is going to be a little bit lower when you're cleaning gutters than it is when you're cleaning windows. And the reason is you can just do a little bit more revenue cleaning gutters in a day than you can cleaning windows in a day is what we typically see. And therefore, depending on how you pay your guys, you can get a little bit better labor rates. So that said, let me dive into what that target budget looks like. So it's intense. There's a lot going on, which is why most people don't even build a budget, is because it's a lot of work. In this case, I did it all for you. A couple things to note. One is this main tab that we're going to go through today on this video. It has everything that you need by individual line item, how much you should spend, and it's built for a scaling business. If you're a solopreneur, or maybe you got one helper or something like that, these percentages aren't going to tie out specifically for you. Go check out the Lean and Mean budget. That's more of a pressure washing thing, but I built that with Aaron Parker, and that is built for the one guy or the one guy and a helper business model. This is for a business that's scaling, has somebody in the office answering the phones, has a lot of employees, and maybe or maybe not you are out in the field too. But keep that in mind as I go through these numbers. That's what this is built for, a business that's growing and scaling. So like I said, this tab has everything that you need to budget for your business, but you can see I've got three other tabs here: sales and marketing, payroll, and assets and liabilities. There are ways to mess with those and inform the rest of your budget. And you can go mess with them and not use them, but if you mess with them and you like what you get, you can toggle on to use it super easily. And if you like it, you hit use and it'll pull all that data right into this main budget sheet. I'll show you as I go through this budget sheet how that works. But if you really want to dig into sales and marketing and use that to build your sales plan for next year, then fill out that tab, hit use, it pulls it over. There's a specific video that I've already made that is out and available, and you'll see it wherever you found this video. Not too far away from it will be how to use that sales and marketing tab. Similarly, there's one for payroll. It's built for whether you pay your people hourly or commission, or whether you have office staff or salespeople, and are they salary or pure commission based or whatever it is. It has all those different options for you to input. Assets and liabilities you should use no matter what. What do you own? What do you owe? And what's the depreciation on it that you get for tax purposes? You don't have to use it. There's a lot going on, but if you want to get this thing like totally dialed in, it's all there for you. But the coolest thing about this target budget is it's built so you hardly have to do anything. Literally, you type in your sales target by month for 12 months, and you're done if you want to be done. Let me take it kind of top to bottom and explain how this thing is built and why it's built that way. This is probably a little more intricate than how you measure your business today, but with hundreds of clients that we do bookkeeping for, and obviously our own window cleaning, pressure washing, and home cleaning businesses, and gutter cleaning we do as well. All of these things are things that we've perfected over the years. And so the way this is built is definitely how you should be measuring your home service company. These percentages might be a little bit different, again, just based on how you operate your existing business, but just know these are the industry targets you want to shoot for, and it's built to be customized to you. So that said, one of the things I like to point out is there's different numbers of business days per month that you're going to go out and generate revenue. And so always just be aware of that. So for example, March this year has 23 business days in it compared to February has 20 days. So we're talking about a 15% increase in days to go produce revenue, which means all else equal, even if you did the same amount of work in February as you did in March per day, you're going to have a 15% increase in March. But don't let that fool you, right? You did the same exact amount of work. You just had more days to do it in March because of the way the calendar works. So always be aware of that when you're budgeting month by month, that not all months are created equal, especially when it comes to payroll. So check this out. This is already built for weekly payroll. If you're in the home service industry, chances are that's how you're paying your people. You might pay bi-weekly, in which case you just override these numbers with how many payrolls you have each week. If you pay twice a month, like mid-month and end of month, this is really easy. You just put a 2 in there for every single month. We pay weekly, and so this is built for the fact that We run payroll by Wednesday. It leaves our bank account on Thursday. It gets to our employees' bank account on Friday. But I want to know how many payrolls are going to leave my bank account each month. And you'll see April, July, September, and December all are going to have an extra payroll leave. And that's really going to mess up your cost of goods sold when you're paying a bunch of people 3 times a month instead of 2 times a month. And so this budget is actually built to handle that math and account for that 25% increase in payrolls that you get. So that is all done for you. You don't even need to do anything. Mathematically, all the work is done. You literally just need to put in your sales right here. So I'm up in Minneapolis. We're pretty damn seasonal, as you can imagine. So we're not going to do much for gutter cleaning in January, February, but then let's say March and April, everything's thawing out and we're getting busy. I got a little bit of a summer lull built in here. We just see a dip in the summer when everybody's off doing other stuff. And then obviously gutter cleaning picks up big time in the fall. So this is just kind of like some random seasonality I put in here. Obviously, put in your own sales, put in your targets and how you think your seasonality is going to work. Right now, we're building this as if we are about a $600,000 business. That's what we're going to do in revenue. If you are a gutter cleaning company that also does window cleaning and also does pressure washing, and you kind of have the full gamut, my advice would be there's a window cleaning budget out there. There's a pressure washing budget out there. Today, I'm going to put a lawn care and landscaping budget out there. I'm going to put a pest control budget out there. So pick the thing that you do the most of and use that budget, and then just tweak those numbers to kind of account for everything else that you're also doing. Don't try to run 3 different budgets. Just run one and just look at all 3 of the ones I created so you can see how much you should spend on the different things for the different pieces of your business, but just adjust one of them to kind of fit the midpoint for all the different things that you do. So this is assuming gutter cleaning is your go-to service and this is what you do the most of. Use this budget. So first thing, payroll. Obviously, you're sending guys out, they're doing the work, you got to pay them. You should be at about 30%, and that's going to include their wages, the payroll taxes for them, training new guys, just all the stuff that goes into paying employees that are out in the field. These aren't people in the office. These are only the employees in the field. Cost of goods sold, we call that. Anything happening out in the field. The other stuff that happens out in the field that's related to cost of goods sold, you're going to put some uniforms and apparel on those guys. You're going to put some gloves on them. Just stuff that's going on them to make them look good and deliver your brand. We're putting in cost of goods sold. It's part of delivering the service, and it's out in the field. It's on that guy or girl. Workers' comp, obviously, keeping your employees safe out in the field, super important. Damages and repairs, because something's going to break. It's going to happen. Budget for it. Plan on it. Obviously, try to beat that budget and don't break stuff, but we all know it's going to happen. You got 2% for fuel, couple percent for merchant processing. So depending on how you charge your clients, getting paid is a part of going and doing a job. Usually, when we go out and clean windows, we like to get paid here. So make sure you're accounting for that expense. And that's part of cost of goods sold. It's part of delivering that service is getting paid for it. The last couple things in here, supplies and chemicals. You're not going to use a ton of chemicals when you're cleaning gutters. Maybe you do. I was in the gutter cleaning Facebook group today. I saw a guy that cleans the outside. So he does some chemical work on the outside to clean the outside of the gutter. So maybe you got some chemicals going on. And then tools and equipment. Maybe you got scoops, screwdrivers, whatever you got going on, chisels to work some ice out when it gets real cold. You got some money allocated to those supplies to get it done. If you're buying gutter vacs and you're using vacuums, if it's under $2,500, it's going to go into tools and equipment here as an expense. If it's over $2,500, it needs to be capitalized on your balance sheet. Then it goes in assets and liabilities, and you use this fancy tab over here. You can see even at the top, it's over $2,500. Well, I clicked in the wrong spot. If it's over $2,500, make sure it's going on your balance sheet, not in your P&L. There was something else I was going to say about this, and then I forgot. Oh, let me show you how this thing works now. So these are the industry targets, right? Your business might be totally different. You might be like, Dan, I know I'm not at 30%. That's cool if that's the target. I'm at 35. You can just type in 35 and it's automatically going to override and use this column for percentages. Now, you can override that override, if you will. Let me show workers' comp as a good example. Workers' comp, let's say you're like, no, I'm actually at 2%. And then you're like, well, actually, I'm at 2%, but I pay it monthly. It's the same dollar amount every month. So yeah, I want to be at 11,800 or about 12,000 bucks, but I know I really pay $1,000 a month. I don't pay 100 when it's slow, and then 1,400 or 1,600 when it's fast. I just pay $1,000 a month. You can override the dollars in the next column here, and that's going to override this percentage and that percentage, and there's your $1,000 a month. So it's built to be customized and customized super fast, so you can just kind of mess with it and put in your own targets as you go down. So let's just leave that one in there for example. Scrolling down now, once you put those numbers in, put your sales in, and it starts spitting out that budget, now you're ready to start putting actuals in. And I'm going to go through the rest of this budget and explain it. But before I do, when you're entering actuals, you literally just go to the section right below that section of the budget and type in your actuals. And let me show you something pretty cool here. So we're budgeting, not much labor in January because we're only going to do 5,000 bucks. So we're saying 1,400 in labor. Let's say we end up doing 1,500 in wages there, and I gotta put in some sales here. Let's say we did 6,000 in accrual sales, and you notice there's two different sales line items in here. I'll circle back to that in a sec. I don't want to skip over that, but let's just say 6,000 in sales and we're paying 1,500 in wages. What else do I want to do? Let's say we had $1,000 in supplies and we stacked up on some stuff. So over to the right here, it's going to score you based on how you perform against your budget. So we budgeted 39.5% for the year here. And I know it says 40 in here, but we overrode this. And so this 40 is going to stick for what's typed in here. But as we override it, these numbers per month are going to change. And so is the overall target for the year. So we're budgeting for 39.5 in this business. Now, in January, we're at 41.7. So we're 2.2% high. This column here is versus the budget. We're a little bit above our budget. I gave a little swing of 2.5%. So if you're within 2.5% of your budget, you're not too bad. You're yellow. But now if we get worse, and let's say we spent 1,800 on wages there, now we're going to start getting out of bounds. We're at 47%, and now we're 7% out of line, and now it switches to red. The inverse of that would be, let's say we're at 1,200 of wages. Now we're at 37%, and we're actually better than the budget by 2.8, and it colors it green. You'll also notice for each line item, there's a percentage and a variance. And so here we're at 17% for supplies versus we budgeted 1.3. So this says that line item is kind of yellow. It's this one doesn't have the variance. It's not red, yellow, green. It's just kind of green or yellow if you're missing an individual line item. Obviously we're over on supplies, but we're under on everything else. And obviously there's a bunch of negative variances there because we're under on all these things we didn't put any expenses in naturally. But that's how it works. So this is just meant to give you the stoplight, green, yellow, red as to how you did against your budget. Let's keep moving. I'm gonna take those actuals out of there just because otherwise I'm gonna forget. Oh yeah, I gotta talk about sales here real quick. So you're gonna have two different types of sales. And I don't mean you're gonna clean the gutters with your left hand and that's a type of sale, and then you're gonna clean the gutters with your right hand and that's a type of sale. I mean, for tax purposes, the IRS is concerned with what's called cash sales. Now, that doesn't mean you're accepting cash, and I would recommend against accepting cash and trying to keep your books legit. But cash accounting means based on when the money goes into your bank account. That's what the IRS cares about. When does the money get deposited? Now, that's not always accurate for how we measure our performance, because you might have done the job 3 weeks ago and had to pay your employees, and that's when you invoiced it. The fact that you got cash 3 weeks later doesn't tell you how you performed at that job in that month. It just tells you have a cash collection problem. So the other way to look at revenue is based on how much you invoice, and that's called accrual sales. Accrual sales tend to be a much better measure for how we're operating out in the field, because it's when we're doing the work and when we're invoicing, and that's the thing that usually drives our expenses. So if we're going to look at how we manage our expenses, comparing them as a percent of invoiced accrual sales tends to be better than cash sales, which is when the money got deposited. So it is valuable to put both of those in each month. And you would do that by getting your cash sales from QuickBooks, how much you deposited, and your accrual sales from your CRM, how much you invoiced. All right, moving on. In general, your cost of goods sold should be around 40% for, and again, that's all the stuff happening out in the field for a gutter cleaning business, which means your gross margin, your gross profit, how much you have left to spend on your business, not on the dudes doing the work or the gals doing the work. You've got about 60% gross profit, gross margin. And you can see, obviously, it's calculating dollar for dollar there. The next thing we look at is the first thing you should be spending money on when you have it, which is growing your business, which is marketing. That's the number one investment in your business. So in general, we're saying 15% on marketing. That's fairly aggressive, but you're not watching this video because you plan on sitting still. You're watching this video because you plan on growing your business and you want to know how much it's going to cost you to grow your business. So, hey, I'm filming a video in here. What's going on? My wife just walked in. Anyway, marketing spend. So 15%, and we kind of have that allocated between maybe some charitable donations. You've got software and infrastructure and like website fees and stuff like that. And then you've got things that actually are driving acquisition costs and getting clients, which are spending money on ads and spending money on the labor, like the expertise, the SEO person, the social media person, wherever you're putting ads up to go get those clients for you. So 15%, again, it's a fairly aggressive number. I've seen guys spend 20 to 25% if they're really going for it. But in general, 15% is a good level for a person that's trying to grow and scale their business. That's a very reasonable marketing expense. Again, you put your actuals in right below it. Now, there's 3 different buckets of overhead costs, and I see this get like mushed together a lot of times. And as a result, this is where most people fail in their business, is they don't know how to break these costs apart, and they don't know when they have a problem, and they don't know where that problem is. They just know, I'm producing all this revenue and I'm not making any money. If you've ever heard anybody say that, this is why they're not breaking these things down this way. So super important that you capture expenses into these 3 different buckets here that I'm going to talk about. First one is admin. Admin is measuring the people in the office. So it is the person answering the phone. It's probably you, unless you're out in the field every day, in which case your cost of goods sold. You can see I've got a line item in here for owner salary. I don't really fill it out because who cares if you're an owner or not? If you're working in the business, you're admin. You're all admin. So anybody answering the phone, anybody doing that work, we've got 12% for pay for the admin. Now, if you don't take a paycheck and you just distribute out of the business to your pocket, this is probably more like 2%. And your admin should be a lot lower because you're paying yourself as an owner, not as an employee. This assumes you're taking a paycheck and paying yourself as an employee and that you fall in this bucket. If you take a paycheck and you're out in the field all the time, your wage should be in cost of goods sold. And then maybe your admin is lower than this, or you hire another person, trade-off, right? But again, this is assuming you're paying yourself a wage, not just taking a distribution. Distributions come down below. That comes as cash out of your balance sheet, out of your equity. So we've got wages for admin. We've got a payroll software. You're paying some fees to run payroll each month. An accountant, a badass bookkeeper, if you will, that's building a budget for you maybe. I've got some in legal services here. Hopefully you don't have any legal fees, but a little bit built in there. Maybe some business consulting if you're going to hire somebody. And I'll differentiate it this way. Business consulting to me is a specific person that you're paying to tell you what to do. And they're probably even helping you execute on it. Compared to a line item I'll get to in a second, which is like education events and leadership development. You might like go to a thing or have a coach or something like that. But if all they're doing is talking, but not actually doing anything or building anything for you, I wouldn't put them here. This is somebody that's like literally working on your behalf. So it's probably 0, but you might be paying somebody to actually like work in your business and on your business with you. And then some piddly expenses for bank charges and other admin. Office supplies, the computers, the pens, the paper, the printer, whatever, 1% should be more than enough to cover any office supplies that you've got. So overall, about 15% on admin. Again, if you are not taking a wage and it's not hitting there, that should be a hell of a lot lower. It should be like 5%. The last two buckets here, fixed overhead right here and variable overhead right here. And there's a very important reason for splitting those two things out. And it's because, and from the admin, right? Admin is like the people doing the things in the office. These next two buckets, the fixed overhead and the variable overhead, those are the things that you spend money on that don't add value to your business or don't generate a return for your business. So they're things that you need and they're things that you want, but they're not out producing revenue. The reason we break them into two buckets is because how you make decisions about these expenses is very different. And hence, when one of these buckets is out of line, it's very easy to pinpoint what your problem is. If you mash it all together, you have no idea what the problem is in your business. You just know you have a problem because you don't have any money left. This helps you identify where you have a problem, and then it's much easier to fix. So fixed expenses are those that you typically contract or lock in and then you live with. Things like insurance, rent, software, utilities, stuff where you're not changing who your vendor is every 3 months. You make a decision and you kind of live with it for a period of time, and then maybe you renegotiate it a year later or something like that. So in general, this is a bucket that you're probably going to want to customize, right? Especially if you're seasonal. Yeah, your liability and auto insurance might be 2%, but just like workers' comp, you probably don't pay a different amount every single month. You probably pay the same thing every month. Let's say that's $1,000, just for example of how to use this. And these are going to be the same too, right? Your utilities aren't going to go like way up and way down. They're generally going to be pretty much the same. Your internet bill doesn't change. Your phone bill's not changing. Software expenses may be the same. We use Service Monster for our CRM. Shout out Service Monster. So that we just pay the same fee every single month, and like we're not going to switch it unless something awesome comes along. We're going to keep that CRM, right? It's a pain in the butt to switch them. So fixed expenses, you're locked in. You're not switching. Rent, obviously, another one. Same thing. Let's just say we're at $1,000 a month rent. You're not going to just switch that every like 3 months. Variable, on the other hand, are all of, so fixed expenses are proactive ones where you're like locking them in for a period of time. Variable expenses are reactive, where either an opportunity comes up or a problem comes up and you just like solve it with money. It's reactive instead of proactive. I have a little bit allocated to all these buckets, but they're not going to happen in this proportion at all. It's going to happen randomly throughout the year as things come up. And so I'd encourage you not to like scrutinize each individual line item of this section. It's just directionally correct. You want to be 5% or less in this bucket. But I'll tell you where you should probably focus the majority of your efforts and the majority of the money in this bucket. So one would be education, events, leadership development. There's no substitute for investing in yourself and investing in your team. The other one, employee engagement. Invest in your team. It's super important to keep people sticking around because it's expensive to replace them. Hence, recruiting, we have at 1.5%. It's expensive to replace people, but if you're going to grow your business and scale your business, you better be going and finding A players or you're going to have a big time problem. Do not skimp on recruiting. Make sure you're spending money on recruiting and finding the right type of people. You see it all over the place, especially like you probably saw this on Facebook. All you see on Facebook is people complaining about how there's no good employees out there. And that's because they're not spending $1,000 a month on recruiting. If they would open up their pockets, they'd have great employees and they'd more than pay for themselves. So make sure you're spending money on that. Obviously, auto maintenance and repairs, you got to get out to the job to do it. Maybe some tool maintenance and repairs if you're using gutter backs, and those go down on you. I got a little bit in here for shop supplies. In my opinion, there's not much supply sitting around the shop. It's usually out on the truck going to a job, so it should be cost of goods sold. But if you got some wrenches or something sitting around the shop, that would be shop supplies, maybe a tool cabinet. And then travel meals. Maybe not in 2021. You might just zero those out. Who the hell knows? But a little bit of money set aside for those things. And then we get down to our operating profit margin. After all those expenses, how much do you actually get to keep? In this case, we're thinking a gutter cleaning business is right around 20% operating profit margin. Now, you still are going to have depreciation expenses for vehicles and stuff like that. So this isn't the end all be all, which is why these other tabs are useful. You can see if you feel like diving in further, there's a section for your taxes where you can pull in that depreciation, use the asset and liability tab. There's also the cash flow section where if you don't take a paycheck and you use distributions, put it in here, and then your total budgeted cash flow will be at the bottom. If you don't take a paycheck, you should be doing way more than 20%, right? You should be doing 30, 40% in terms of operating profit, knowing that your paycheck is really a distribution of equity. You're not really paying yourself for the work you're doing. You're paying yourself as an owner. And so it'll come out way down here in budgeted cash flow. That's it. That's the budget sheet, guys. Go check out the other videos. There's a sales and marketing video to dabble with that. Super easy. You fill it out. Again, if you like it, if you like the results you're getting and it makes sense, you hit use and it's going to pull it over. Now it's going to mess everything up because I got 0 in there. So all of a sudden it says I have 0 sales. But basically, if you click use that, it's going to update the marketing section and it's going to update the sales section. Let's not use it since there's nothing in it. Similarly, you can use this super built out payroll section for tax and for admin. And if you click use, it's going to pull it over. And now it'll say, it's 0 because there's nothing over there. But that's how that works. So go check out the other videos, nerd out on the budget sheet, and be ready for 2021, guys. I will see y'all later, and hope you enjoyed the video.